Welcome back. You're watching The Money Show on ET Now. It gives me pleasure to introduce my first guest, Prableen Bajpai, the founder of FinFix. Thanks so much, Prableen, for joining in. And I think one of the positives of this last couple of years is that a lot of young people have started investing. A lot of them are investing directly in the stock market, but I know for a fact that a lot of people have started SIPs as well. And while that's a great start, is it not incredibly important to increment that saving over the course of several years to get the best benefit of it?
Thanks, Alex, for having me on the show. Absolutely, it's very, very crucial because our earnings, our savings, our expenses, our investments are all variable factors, Alex. And as our income increases over the years, consciously and just a lifestyle change just begins to happen, and there is always an simultaneous increase in our expenses. Part of it can be, related to your responsibilities as we age. Part of it is discretionary. So it's very, very crucial that our savings also increase, with time. That's very, very important. And this even a little addition to your savings can actually work beautifully over the long run. And, there's this, I'll give you an example. For somebody, just starting off with, let's say, 10,000 rupees a month and looking to invest for a 20-year period. And if you consider 11% return, a CAGR, can actually accumulate about 87 lakhs. And interestingly, Alex, if the same person is increasing his SIP amount monthly by just 1,000, let's say each year, the same corpus can grow up to become about 2 crores in the same time period of 20 years. So the first year, it's like an investment of 1,20,000. And the next year, because we're increasing the SIP or our investment by just 1,000 each month, the amount invested becomes 1,32,000 and so on. And, this little increment can work beautifully over the long period of time.
And it also spells out what can happen, Prableen, if you are consistent over a very long period of time. I only wish that I had somebody telling me at the age of 25 that I should start investing 10,000 rupees every month. But having said that, I think a lot of people follow a very simple policy. I do too. I say that if I can spare about 30 to 35% of my income every month, that is something that I should do on a consistent basis. And if my income goes up, then of that increased amount, you should save the same percentage, that is 30 to 35%. So on an ongoing basis, my savings will also increase along with my income. Is that the right way to approach it?
Right. So, Alex, I feel in India, if we are broadly speaking, not everybody would be privileged enough actually to save about 30 to 35%. So for somebody who's starting off and has a family to take care of, sometimes their parents who are dependent on you, there are n number of responsibilities. I would still advocate that about a 20% saving is a very, very good starting point. And gradually from there, a person can pick up the increase can be there. And globally, there's this rule, which is the 50, 30 and 20 rule, which is advocated, which means that 50% of whatever your income can go into, your general necessities, which are, your grocery bills, your rent and other essentials. About 30% is discretionary and 20% should be saved. Now, when we apply this to India, it's a good starting point, but there are two issues here. One, that inflation in India is very high, Alex. So you and me, by the time we retire, and we are in our 60s, we are not even sure of how expensive things would be. So even a basic inflation of 6% is very high. Our expenses would really, really swell by the time we are in our 60s. And the second is that in India, we really don't have enough social security. So just a 20% starting point would not be adequate. So 30 to 35% is great. And as one, is able to, let's say, get a raise in their salaries and simultaneously with the increase in the responsibility part, there is a lifestyle change as well, Alex, because you would agree, let's say the first increment you get next year, the first thought which comes to our mind is, okay, let's go and, eat at a better place today. Let's go on a holiday. So the discretionary spending really tends to rise faster. but it's amazing and it'll be very great. I mean, for the later part of our lives, if we can actually increase the percentage component which is going into your savings and investments before we increase the spending part, the consumption part. So that's what I had once said, that the marginal propensity to save and invest should be higher than the marginal propensity to consume with time.
Oh, I get that. I get that. So assuming that your salary is going up by 20,000 and you were initially doing 20% of whatever your income was before that increment, in that incremental 20,000, you have to ideally aim for 30 to 35% rather than just going with the same 20%. That's more or less correct, right?
Right. So Alex, because let's say for somebody who's earning 1 lakh and we say is saving about 35,000. So that's a percentage, 35,000 is being saved. Now, if the salary goes up to 1,20,000 and the person is still saving 35,000, the percentage allocation comes down to actually 29%. So definitely the percentage allocation needs to be maintained. And I would advocate that as you are in the income bracket, see, your necessities are always limited. It is over a period of time that your wants, which is your discretionary spending to quite an extent, starts to culminate and become a part of your necessities. So it's really good if that can be contained to some extent, and gradually your percentage saving from your incremental income can also go up, especially when it's coming as a part of your bonus, some sort of an annual increment which is there. I think that can do wonders during, work wonders during your retirement phase.
So this is a simple policy to follow. At least for me, Prableen, what I do is as soon as I get my salary, I apportion the percentage that I've dedicated for investments. And then I think that whatever I have left behind, I can spend on whatever I want, right? Because it's guilt-free at that moment. But that's just the way that I look at it. In your example, you spoke about 20 years, and this is something that I think is absolutely crucial to understand, Prableen. When you have enough of a savings or a nest egg under your belt, and assuming that you start very early, the temptation at some point is to say, hey, you know what? There's that car that costs 10 lakh rupees that I've always wanted. Why don't I go and buy that right now? It's not going to make a sizable dent in my overall corpus. How important is it, because of the law of compounding, to keep that intact, that corpus, for the duration of what you intend to save on, especially if you have a long-term saving goal?
For long-term saving goals, Alex, I think another very, very important component that has to be seen, we sometimes really tend to overestimate how much we will be earning over a period of time. So there can be stagnation somewhere later in your career. Your job may be the one which can be taken over by something like AI, or, you really don't know what's going to happen even 15 years in our own careers. So it's very crucial to keep saving a very healthy component out of your savings. Compounding is something, which works when it's undisturbed. So obviously, when you're getting an interest on interest, that is something which definitely any investor should look at. And Alex, it's not only through your SIPs, even your provident fund, your employee provident fund. I think these two, tools of investments must also be utilized very nicely by investors, because let's say a public provident fund, a 7.1% compounding, which is tax-free, I think is a very, very good instrument. So even if somebody is starting off with, let's say, 2,000 rupees or 5,000 rupees in their PPF, they must go up and, avail the whole of 1.5 lakhs during the year. And same goes for your EPF. Whatever maximum you can, that must be utilized, because again, a 8.5% compounding can work amazingly well. And again, the tax benefit is there in these two instruments as well. So compounding works best when it's undisturbed. And I think that is something which all of us, must, look in, try not to touch that part of our savings.
Absolutely. Absolutely. It becomes incredibly hard to do, Prableen, when you have a stellar year of returns on the stock markets. But let's move on to queries that have been sent to us by our viewers. We've got Ejaz, who's asking about his investments. He's shared his list, which we have also shared with you, and there are a number of funds that he currently invests in. In fact, I can read 1, 2, 3, 4, 5, 6, 7, 8 or thereabouts right now. He also says that he's got adequate life and health insurance and an emergency fund through a fixed deposit. But he's wondering whether to add another value style fund. He's looking for a value fund with a reasonable AUM between Kotak Global Innovation and Axis Global Innovation. Which would your pick be?
Okay. I think so. There are two parts to his question, Alex. One, he's looking for a value fund, and second, I think he's wanting an international allocation through one of these two funds. Okay. So his current portfolio already has two funds which have partial allocations outside India. So if he's looking to add another global fund, it is crucial that these two funds will actually result in some sort of duplication, because the Axis fund, which will be managed by Schroders, he already has 35% of global allocation through his Axis Mid and Large Cap Fund, the Growth Opportunities Fund. So the investment managers remain the same through Schroders. And even if he's taking Kotak, it's again through an FOF with the Wellington Innovation Fund. So I would suggest him two things here, Alex. Number one, that the 35% allocation that he's having globally through two of his funds, which is Parag, Parekh and Axis, are already active strategies. And the top holdings of these two funds, which he's mentioned, will result in immense amount of duplication. I think that either he can take a passive strategy now to invest outside India, probably a S&P index, or if he is looking to increase his allocation outside, then it also should be slightly towards the emerging markets, because these two allocations, the current ones, partially which are there through his holdings, are US-centric. And coming to his, wanting to add a value fund, here he can either look at SBI Contra or Invesco Contra, or alternatively even look at DSP Value Fund, which again has a 35% allocation outside India. So that also will give him a different flavor. So the idea is to add global diversification, but not result in too much of duplication of the top 5-7 names, Amazon and Facebook and Apple.
Fair enough. We've got another query coming in, and this I think is quite an interesting one. So Sanjay Hariharan is saying that he's going to sell his flat and he expects around 60 to 65 lakh rupees from the sale. I do not know if this is post-tax, but in the current market scenario, how does he allocate it with a 5-year horizon? At this point, Prableen, we do not know what his long-term goals are, but assuming all other factors equal, how does one invest a lump sum amount that one gets to the extent of 60 to 65 lakh rupees?
Right. So Alex, he hasn't mentioned actually the flexibility of this time period. Number one, that's important, and also his risk appetite. Is he okay with an equity allocation? So considering a moderate risk profile, I think he can take a staggered approach. He can simply pick one index fund. I would advocate a Nifty 50 equal weighted index fund, because it's a mix of growth and value investing, and he can add a hybrid aggressive fund or a dynamically managed asset allocation fund to that, if he's okay with equity orientation. And if he's not comfortable with that, then maybe a conservative hybrid fund for him, because that will have about 15 to 20% in equities, and then he can club up with a high quality banking and PSU debt fund. So depending on his risk appetite and the flexibility of his time horizon, he can take a call.
Okay, Prableen, I think I'm going to have to pick up a notepad and calculate my incremental increase in savings. After this conversation, it certainly benefited me, and I hope that it's benefited everyone tuning in as well. It's been an absolute pleasure speaking to you. We're heading into a short break right now, but more on the other side, so do stay tuned.